Hey folks, welcome to Finland's. In this session, we will cover the master feeder structure, partners' capital, equity pickup, and how the money flows to the master feeder structure. So stay tuned till the end and subscribe to our channel Finland's for more intuitive videos.
Investor, feeder, and here we are going to invest. Now, as you can see, okay. So this is our investment. Okay. So now for if I talk about SPV3, okay, don't think of any right now. Just think this is what don't think this is a fund of fund. Think this is venture capital only. Okay. Because if I go with fund of fund again, it will be like a bit shabby. So I do not want to continue with that. So fund of fund, you must have understood. Okay. So here, I think this is the venture capital. So SPV3. So who is the investor to SPV3? SPV2 and SPV1. Can you please tell me? Investor.
Investor.
Hmm.
Feeder fund.
No. The master fund is the
Fund.
investor.
Okay.
to
Okay.
SPV.
Yeah.
And
Okay.
who is the investor to master fund?
Feeder fund.
Yes, it's the feeder fund. So how they are performing? So now what happens? This SPV they are going to submit a PCAP to them. Okay, PCAP is what? So I'll tell you here is the formula for your NAV. Okay, so NAV formula I'm going to write. This is called contribution. Okay. Sorry, your beginning NAV.
Okay.
Beginning NAV, suppose anything like I'm taking is 125. Your contribution is your 80 and your distribution. Let's keep it minus 3 contribution and this is 80 distribution and P and L is your let's take a profit of 40. Okay. So
Okay.
now NAV. So yeah, this is how we have to calculate the NAV. Okay.
Okay.
Okay, this is the basic formula for NAV, calculating a NAV. Okay, so now the beginning NAV is 125, contribution is 60, and distribution is 80, and PNL is your 40, and this is 145 is your NAV. Okay, yeah. So this is the beginning NAV. So this is the NAV. Okay, so now this is how. Suppose this is the NAV for SPV1. Like this, we have calculated for SPV2, and like this, we have calculated for SPV3. Okay.
Okay.
So I'm going to calculate. So this is 120 and this is 110. Okay. Now clear?
Okay.
Yeah. So now the thing is, now I'm getting some amount from SPV is 145. This is from 120 and this is 110. Right?
Okay.
So this is my NAV. NAV, I've taken all the things consideration. So now when I'm going to submit this NAV, of course I'm going to give you the this thing master fund. I'm going to submit this 110, 120 and 145. Right?
Okay.
You're getting what I'm saying?
Yeah. Yeah. I'm fine.
Okay. So master fund is like they are investing in SPV and SPV now they are generating the PCAP and sending to the master fund. Just think of that.
Okay. Okay.
So the concept, this what 145, 120 and 110, when it is going to be picked by master fund, that is called equity pickup. So this is 375 he is going to pick up.
Okay.
Got it?
Total 375.
375. Okay. So out of this 140 from this, 120 from this and 110 from this.
Okay. So,
Because this is how the NAV functions. Okay. 375 it is done. Okay. So now as you see, I have mentioned here something called it as PNL.
okay.
PNL means what? PNL means your revenues and your expenses, right? These two things will cover and PNL. So 40 is your profit, what you are getting.
Okay.
Okay. So same like this for SPV1, SPV3 also you must be getting something. Okay. So revenue, expenses you have adjusted here.
Okay.
So now here also you have to adjust these things. Okay. 375 you are getting everything now. This is the equity pickup value.
Okay.
Okay. So now for each entity, like I've told you that they are charging some because SPVs they are going to charge in their level. Okay. SPV1 they will charge from their level. SPV2 because you are investing, being an investor, there will be some expenses which you have to bear. Just think we have a master fund and we are going to invest in these three. What will happen? What will happen at that time? You have to bear the expenses. So now master fund is the investor to these SPVs. Okay. So these SPVs they are getting some expenses. Okay. Some revenue and they're generating your NAV and they are giving you NAV that is called equity pickup. So out of these, master fund will also some generate some expenses to their level. Okay, there will be some fees. This particular SPV is also going to charge the master fund because for them right now feeder fund is the investor.
Okay.
Okay, you understood the concept till here, I think.
Yes, I got it. Yeah.
Okay, till here you understood. So
Yes.
now go further. For master fund, who is the investor?
Feeder fund.
Feeder fund. So now, what SPV they have done to master fund, same master fund will also do for feeder fund.
Right.
Okay.
Agree.
So now what feeder fund will do out of 375, I'm not going to break it down. So out of 375, let's take I have taken 20 as my expenses.
Expense. Okay.
So let's take 50. Okay. 325. Okay, 325 is the NAV right now I'm giving you. So this
Feeder fund.
to feeder fund. Okay, so now 325 is the equity pickup for feeder fund.
Right.
Right. Correct. And this feeder fund is also going to charge something.
Right.
In their level, and it would be 100% management fee they are going to charge. Okay. All level they are going to charge at least a management fee. Okay. So now I'm telling you, like suppose 25 they have charged. Okay. Now let's do this. 325. So now investor level, I'm giving you the equity pickup of 325 minus 25.
Okay.
Okay. So this is the equity pickup for this investor. So now this 300 is going to divide among the investors. Okay. This is what the equity pickup is all about. This is what the master trader structure. This is how the money flows. Yes.
Yeah.
That's why expenses will be more in master trader.
Oh, okay. That's a disadvantage you're talking
Yeah,
about.
that's a disadvantage because fees are getting charged again and again. Of course, in master trader they will say like 4% of fees I'm going to charge, but it is not going to charge by one fund manager. They are going to charge the multiple fund manager.
But in that case, then why investor going for these funds rather than standalone fund?
That's what diversification, risk, your tax.
More revenue you are talking about.
Yeah.
In mutual fund, you can also see the same thing.
Yeah, correct. Exactly. Yeah. Okay. So this structure you should always keep it in your mind whenever you are discussing about master feeder structure. Okay.
Sure.
And this is what I've told you about. I think I think I deleted. So the fund of fund also you understood. Yeah. These are the key elements of your PCAP statement. Okay. So these are the things and how to calculate the NAV. So understand the concept. Okay. So this is how you will find the information. These are the information you will find in a PCAP, and this is how we have to calculate the NAV. Asset minus liability. That is also called NAV. Okay. Yeah. So you understood this concept?
Yeah.
Okay. So is there anything which you want to ask or anything? Okay. So what I believe you should understand both concepts. Mention like contribution, distribution, everything will be the part of balance sheet. Yes, because he has good knowledge about all these things. But if you should know the bifurcation, that how it is coming. Okay, and the NAV, the beginning NAV, the contribution you have to add and then subtract. So plus minus.
Right. Yeah.
Okay. So and the profit and loss. So some statement, what I wanted to tell you that in PNL they will bifurcate this PNL. Okay, so they will add everything. So they will do the calculation of PNL, but they won't add this thing, the carry.
Mhm.
Carry part they won't add. And here they will separately show you carry.
Okay.
Okay, that could be your plus minus. Okay,
Right.
so here in
Okay.
balance profit and loss carries the part of profit and loss. But what will
Okay.
happen? In some funds you will find that PNL they are showing differently and carry they are showing differently. Okay.
Differently. Okay.
So suppose I can show you this here 20, here 20. So ultimately you can write 40, otherwise you can write 20 and 40
Okay.
or
Understood.
20, 20. Okay. This is how they are doing. So this is kind of bifurcation. Okay.
Yes, got it.
And when we have discussed about ELPA, so ELPA, according to ELPA, these are the elements you should always keep it in your PCAP statement. That's why we are telling you this is the standard procedure. So as if you can see my screen, so
Yeah.
I have opened this KPMG okay statement, financial statement. So this is
Okay.
the financial statement what we have. If you see, this is the PCAP statement, partners capital they have mentioned, and you can see the beginning NAV is your general partner of this much. Then contribution they are going to add, the distribution they are going to deduct, and this is the
Mhm.
bifurcation of your profit and loss account. Okay,
Okay. Fine.
net investment loss here, realized and everything. Okay,
Right.
so at last the profit and loss is 8458. Okay. So what I'm telling you, you directly can write this amount. Otherwise, you can show this bifurcation. Okay.
Okay. Understood.
That depends. Okay.
Carry. Okay.
Okay.
Rather than carry, we'll come to net income.
At last, see if you see here 75,884 was your beginning NAV. Okay.
Mhm.
And now the NAV is 84219. Okay.
Okay.
Triple zero. Okay. This is for GP and this is for LP. Now this is how we have to just this is the standard one which I have told you.
Okay.
So yeah, this is what I wanted to cover, and yeah, now you must have understood this concept of uh, the fund structure. Now,
Yeah.
strategies also you understood, fund structure also you understood, single manager, multi manager also you understood, equity pickup, how to what are the elements of PCAP statement and how we have to calculate the NAV, asset minus liability, and this formula also beginning NAV plus your this one. Okay.
Yeah.
So this much you understood. Do you have any problem into it?
Mm,
No. Yes. Maybe.
One last question again.
Yeah,
Can you
go on.
just yeah, because can you just can tell in the layman language for equity pickup one more time? Just last.
Okay. Equity
Because
pickup is
I'm hearing this the name the first time actually, so I was not favorable for this word.
okay.
Equity
Equity pickup is nothing but the NAV.
NAV.
Okay.
NAV.
Since
Okay,
you are
it's kind of a NAV.
what is NAV? NAV, if I tell you, it is the equity only. So
Okay.
now I'll tell you A, B, C, D. Okay. These are the
Mhm.
four people. Now I would
Right.
say 100, 120, 100
Okay.
and 100. These are the commitments. Okay. So
Uh,
I'm writing here sum. Okay. This is a 430. Now I'm going to calculate the weightage. This is how I'm
okay.
going to calculate the weightage. Okay, sorry.
Okay.
540. I'm going to freeze it. Yes. Okay. So now if I calculate this, this would be 1. Okay.
Mm-hmm.
Percentage. I'm going to calculate this in a percentage. Now it is 23%. Now leave about contribution, distribution, everything. Now I'm telling you the equity pickup how much I'm getting 375.
375. Okay.
So now the 375 is my NAV. suppose 375. So what is
Okay.
NAV? So now I'm going to distribute this uh, right here,
Okay.
355 here, and this is NAV. So what I'm going to do, I'm going to distribute this particular among these according to their this. So
Okay.
this is how it is getting distributed, 375. Okay.
Ah.
Now, what is 375? If you see closely, this is now only. So this is actually a equity. Equity is something. What is equity? If I ask you what is equity, it's normally what do you think of equity? Equity is nothing but the part of your uh, this one part of your capital.
Right.
Part of your capital. If you see the equity market, whenever you're going to invest, you become a part of their capital. Okay.
Okay.
Probably it would be 1%, 0.1%, 0.1%, 0.9%, 10%, 20%. So we have this one. So whenever I'm going to issue 100 crore of equity, okay, whenever I'm going to launch 100 crore of IPO, if you buy 10 share of that, you will become something. You will become a part of that capital.
Okay.
Okay, that's called your equity. So here
Okay.
we have invested 430.
Hmm.
Okay, 375 I'm getting a proceeds. Okay, so
Okay.
this is only equity is all about. I'm going to invest this equity among the investor. So you
Okay.
say equity or you say NAV, both are same at the same.
Same. Okay.
Okay,
Understood.
so what I'm going
Yeah.
to do here, this SPV is earning 149. Suppose, okay, I'm not, suppose I have invested here. Now, I didn't tell you one thing. That's why I think you are getting confused. So, suppose I have invested here 250. This is the investment side I'm telling you.
Okay.
250 investor to this also 250. This also 250. So 250, what I'm telling you, investor, you have invested in a feeder level, and then the feeder, they have invested in a master level. So right now it's 250 only. So now the bifurcation happens. So what bifurcation happens? Here you have invested, suppose 100.
Okay.
Here you have invested, suppose 100, and here suppose you have invested 50. This is the
Okay.
sorry, investment amount I'm talking about.
Mm-hmm.
Getting my point? Invested
Yeah.
amount I'm talking about. Okay, and these are the gain amount what I'm showing you here.
Okay. Got it.
Okay, so now if I tell you 100 you have invested, 145 you got from this SPV, 100 you have invested, you got 120 from this SPV, 50 you have invested, you got 110 from this investing. All total you got 375, right?
Okay.
375. So 375 you are giving to master fund. So master fund, what it does, it is picking up your equity. This is called equity pickup, taking a NAV.
Okay.
Okay, but
Okay.
but we have this particular term, the jargon what we are using, that is called equity pickup. Okay,
Okay.
so equity pickup it is done. So this 375 is going here. This out of this 375, he is going to take out his share, what the expenses he bear. Okay, so 325 is right now the equity pickup for them. So 325 he is going to transfer it to feeder fund. Feeder fund again they are going to charge their fees. Okay, out of that 25 fees they have charged, and now they have passed on this 300 NAV to investors. Now this 300 is going to invest here. Okay. Now
Okay.
these are the investors who invested in this, and now they are getting this share. Normal structure is not required because in normal structure, what we are doing, it is like LP. LP to the money is going to GP. Okay. There will be between them, there will be a fund, and they are going to invest in a deal. So deal is getting now from this deal, you are getting the proceeds, and this proceeds you are going to invest between the LP and GP. That's all. There is no need of equity pickup.
Okay.
Okay. But here there is a need of equity pickup because you have segregations.
Mm-hmm.
Okay.
Understood. Now I understood.